All right. Sorry, guys. Had to get all set up here. For the ones that are new, pretty straightforward here. All we're doing is we're reviewing what happened today, right? Looking at it with simple yet effective logic and seeing what moves were created, what setups it provided, what opportunities were in the market today, right? And I do these on every high probability trading day. If you're not familiar with the term, you can head to my Twitter, to my highlights tab. You'll see a thread where I shared a PowerPoint, PDF technically, about the economic calendar and how I use it to define high probability conditions. So that's definitely a quick read and a great read. But enough talking. Let's dive into the charts just to make sure real quick everybody can see my screen at the moment. Give me a little heads up in chat. Awesome. All right, so starting on a daily chart, as always, right? What did we say our weekly outlook targets were? Okay, we had the equal lows right there and the sell side onto this, and then we were looking at specifically IPDA 40 lows. Did we take them out? Yes, we did. Beautiful, beautiful prize delivery this week. I am very happy. It was a great week for myself. I hope you guys too. And as you can see on ES, we have not taken the IPDA 40 lows if we align both shifts. But if you take the SMT, if you forget about the SMT that is present at the highs, we're just past equilibrium in a discount. And I do believe that tomorrow we'll be heading for these lows, but we'll have to see, right? Because there's SMT at this level, right? Right now there's SMT that is currently forming between these highs and these lows. This is what happened today. So it probably going to be a little wonky for the next few days when you have higher time frame SMT form, but we'll see once we get there. Diving deeper into what happened today, if we look at it here, I'll just mark out with lines so it's easier for you guys to see. Always, always, always top down. So right here you can see my weekly candle and our daily candle that is currently forming at the same time, right? We're in the Asian range right now. We had a beautiful, beautiful 4-hour SMT. Doesn't get any cleaner than that. Right here, this is 10 a.m. 4-hour candle. Let me just mark it out correctly. That doesn't seem right. Yeah, that does not seem right at all. There we go. So we have SMT at these levels, which formed the high of day, right? And just in case you guys are familiar, just look every single day, SMT at the high, SMT at the low, every day. SMT is the best tool, for me at least. But diving a little deeper, you can see we're in an hourly chart right now. By the way, if ever you're confused, just look at the bottom of my chart. You can see we had a beautiful 930 open in Judah swing lower to bring us to higher prices before said SMT occurred. And just looking at an hourly chart right now, there are no clear inefficiencies here where I could look for. But what is there on NASDAQ? Well, we have an order block. I want that marked out so that we can later refer to it on a lower time frame chart. I'll mark that out correctly. Give me a second here. 1 hour bearish order block, while as we can see on ES, right, we ran through the liquidity. We swept those highs. A little more than swept, but we ran through those highs. Diving deeper, 15-minute chart, nothing different here. Okay, and yes, you can start looking at every single 15-minute inefficiency, but I like to use the 15-minute chart for targets, for clear objectives on where price is going. And here, if we go back to 4-hour real quick and I mark out this sell side liquidity, which is the low of February, right here, we are in a big sell model at the moment. If I go down to the 15-minute here, you'll see how this was inducement of that level, and we took out that level for the 930 open Judah swing. Excuse me a second, my mouse battery is low. I'm just gonna have to plug it in. All right, just making sure there were no sound issues from that. You guys can still hear me all right? Give me a little heads up in chat. Awesome, thank you. So, getting back into our chart, we had a beautiful 930 open, Judah swing lower to go take out liquidity. On ES, it took out these lows, but did not take out these. What is that? Well, we have SMT telling us ES is stronger. And as we can see from the result now, with hindsight, SMT works. The stronger asset was indeed ES. I had a hard time saying that, the SMP. And it delivered, right? It got us to lower time frame, well, higher time frame. I don't have my setup for ERL yet, but to our external range liquidity right here, and expanded through it while NASDAQ failed to reach those highs, forming the SMT we were talking about less than a second ago. But diving down, I like to go to my 1 minute directly. I use the 5 minute as a confirmation time frame. So basically, anytime I'm looking for a trade in the 1 minute, I look, does it make sense as well as my 5 minute chart? If it does, then yes, take the trade. If it doesn't, it's not following intermediate time frame order flow, so I'm not taking a trade. Basically, every time frame is the same. You're looking at the same thing. One just gives you more information than the other, right? And I like to do these top down just like this because, as you can tell, it was simple today. How? Well, on a higher time frame, right? You go to a 4 hour here. You go to a 4 hour, you're like, okay, well, retracement to the order block. That's what happened today. ES swept liquidity right here. Now I have 2 ERL, but ES swept liquidity. Let me just make sure I can see that in a 1 hour. Awesome. So ES swept liquidity while, well, I'm looking at the upside, right? But ES swept liquidity to the upside and continued lower, while NASDAQ retraced into a 4 hour order block before continuing lower, which formed SMT. And once you start going down to the time frames like we just did, right? I'm not going to do it all over again for no reason. Once you start going down in the time frames, that's where you can get your opportunities from these higher time frame moves, right? And if we dive a little deeper and we look at the 930 open, we had 830 news, I believe. Unemployment claims had a lot of Powell speakers also speaking on different currencies. I don't trade Forex at the moment. I'm planning on diving into it with my swing trading personal account, but nothing yet, right? So I don't look at those. I solely look at USD news. But as you can see, we had a pretty tight candle for the news, and we traded within the range of that news for a while, just testing out the extremities multiple times, which created what? Consolidation, right? And what are those? I count those as equal highs. One tick is not enough for me. So when I'm looking at a high that's been swept by one tick, I just see that as inducement. So that was my objective for the morning. It was those relative equal highs. And as you can look to the left, you have equal highs here, you have equal highs here, equal highs all the way, well, here, you know, all of this is what? Low resistance liquidity. So all of this is the exact drawing I had on my chart this morning, just a big red arrow. All of this was low resistance liquidity. So yes, I was looking for the highest high of this level. This is the order block. I don't want to mess with that, but I was looking for this price. But once you see that ES takes out this price, which here, I'll even add a little horizontal line right here on both charts. Let me just change the color of that. I'm still messing around with my templates, haven't found anything I completely like yet. You'll see that, hey, we took out those equal highs of the consolidation at the moment when ES took out its external range liquidity, its higher time frame external range liquidity that we were looking at. So when things like this align, that's when you know that's how you get your good setups. More specifically, if we dive into the price action, you had a huge Judah swing lower, right? That was a big move, but we had liquidity to take out at this level, right? I'm not going to go back to it, but it is 1 hour external liquidity. You know what? I'm going back to it. I'm going to show you guys. So it was that well, higher time frame actually, the low of the 21st, but I was also thinking of that low. So we had liquidity to take out there, and as we know, a stop run is deep. It's not shallow. It has to run through that liquidity to take out all the orders in proximity to said level. After we did that, what am I looking for? Or most specifically, 940 gives me the 10 minutes after the open that should end any manipulation. So that was 940 for you. And what do we have after? A change in the state of delivery. This is not a high probability change in the state of delivery, just inverting the bottom bearish fair value gap, right? But it is. We inverted this fair value gap. What I teach my students to do is to always refer to the premium array in our range. That's always your invalidation level. It's your low-hanging fruit objective. It's everything. So on this one, I'd be looking for either that order block or a sweep of this liquidity into this fair value gap, which is more around the range of OTE. That's exactly what happened. And then we start going back down. But once you add context, like for example, right here I have my 10 a.m. candle. I'm going to draw out its opening price and mark it out with a blue line right here, blue dotted line. Once you add context like power in 3 and all these things and levels that are too clean, plus we just took out external range liquidity. Where are we going to retrace to? Towards internal range liquidity. External ERL to RL, RL to ERL. So once we took out this swing low, we're going to retrace inside our range. Okay, well now I'm starting to get a lot of lipstick on my chart. Let me just change the settings for these and just drop down the visibility so we don't have to see it. All right, that's a little better. So we're going to retrace into our range, and more specifically here, I won't even use OTE. We're going to retrace into our range into a premium. What is our first premium array? Well, we have a order block right here. Right now I'm in a 1 hour chart. I'd be referring to a 4 hour. So this was our current range. You'd be looking at the order block for a low-hanging fruit objective, the 4 hour order block. But I refer to the 1 hour here because we're analyzing price with hindsight, right? Of course, I'm going to choose the exact point, the most precise point when it turned around. Can I tell you today what was my target? Well, I told you. It was these equal highs. That was my low-hanging fruit because I know that after sweeping that, it could very well retrace deep. And see, it wanted to retrace. We just had a high resistance liquidity run to our objective, consolidating within. So no need to have the huge objective. As we'll see in a second, I'll show the entry and everything. So from this point on, 10 a.m. marks a new 4 hour candle open right here. Here, I'll just put a clear line. New 4 hour candle opens. What do I want to see? If I'm anticipating higher prices, I want to see price displaced towards these highs after a nice Judas swing lower. Go target that consolidation. Well, it's simple. I want to see the open of a candle, and then I want to see it put up its low for an open, low, high, and then of course retrace to a close. I want to see an open, low, high close. And what did we get? Open, low, high close. My drawing was almost perfect there. You know, I want us to open, and then of course we're gonna consolidate for a while. 2 minutes when I'm looking at a 1 minute chart, of course. Then what do I need it to do? Well, I need it to tell me where it's going. Okay, so I'm gonna look at this range, and I'm gonna look at a discount array. What do I have? I have this order block right here. Order blocks are the best things to look at if you're looking for a trend continuation. So I could say that this move up is an expansion. It is a trend. Now I want to see a continuation of that trend, and it's going to retrace to a discount first. Where? To the discount array. There's no fair value gap in discount here. This one was in premium or at equilibrium, which to me is the same. I disregard anything at equilibrium. I don't think they should be used within the PD array matrix. But then you have this order block. Respect of this with the context of power of 3 tells you, hey, okay, now it's going to go higher. You already knew it was going higher, but it's telling you that now it's ready to go higher. I'm going to put this a little slimmer. and dive more precisely into it, because some of you guys here are new and were brought into this Discord because of the thread I did on Twitter. Well, here's when we use it, right? Breaker blocks. Well, you have a bullish breaker block right here. Not the best. I would have preferred to use this one, just because on the bottom it's a very tight range and there's nothing very impressive about this move. And the last bullish candle is also a swing low. Doesn't mean it's bad, just means that I would use precisely this candle to use it. Oh, sorry, I didn't see your message, Terrell. That's awesome. Got that training demo. Yeah, and as you say, Xav, power of three, open, high, low, close, open, low, high, close. That's just the thing that makes people click, right? Oh, okay, so that's how it works, actually. Because it gets simple. People are trying to overcomplicate it with things such as Enigma and all that bullshit. And let me tell you, well, I don't know Enigma. I don't know what that is, whatever. Thank you. I can't see your full name. Why is Discord putting me in streamer mode? Here we go. Jam Jam. Thank you very much. I appreciate that. And you'll see. You should stay in here. There's only more to come. But to get back on track, because I'm always getting off track, open, low, high, close, and everything like that, power of three is how higher time frame candles are formed, is how you get your lower time frame trades. So definitely the best things to be looking at. More specifically in this setup, my breaker right here pushed price higher. So that was beautiful. 10 a.m. open, breaker formation, the invalidation, basically trading back above after only trading lower, and I'm looking at candle closes here, are this changed in the state of deliveries for me. So my change in the state of delivery, when I'm like, okay, now it has to go up, is on this candle right here that I'm pointing out, when we create the breaker and we close above the opening price. Don't start looking at closes above opening price and stuff like that. I'm using it for this example specifically, and it's not something you should use multiple times and at all times in any case, right? If you're looking for a change in the state of delivery, use the first example that I did, right? My discount array and my premium array that should not be invalidated if we're bearish. Once that gets invalidated, that's when I can be like, oh, okay, well, maybe it's not so bearish after all, right? Which we didn't have in that case. Why didn't invalidate this? Time. Right? It had to wait for the 10 a.m. open. As you can see, on this specific case, we don't have a fair value gap overlap. I'm going to delete the external range here. I'll just leave a little line so that we remember that that was the level that was reached. Here, a big line actually. We did not have a fair value gap, but we did have an inversion fair value gap. Inverted fair value gap, I always mess around with both of them. I never know which one to choose, right? So what do you have? You have 10 a.m. power of three. You have a clear objective, a nice Judah swing. You are within the 950 to 1010 macro, right? Well, I'm talking about power of three, but we're also within macro. Our higher time frame objective has been met. So now what are we gonna do? We're gonna spoil against that. Spoil. I can't speak tonight, guys. I'm sorry. We're gonna spoil against that. Spool. I'm gonna get it someday. But going back to this inverted fair value gap right here, that was a beautiful unicorn entry. But as you maybe saw in chat, some of you guys, one of my students, actually missed that one and took this one. Why? Well, pretty simple. Is this still a unicorn? Yes, you have a breaker here. Here, I'm gonna stop always drawing in the same color here and mark this out as the fair value gap. You also have a breaker block here. So this fair value gap and this displacement fair value gap as well, this is a large fair value gap, is also a valid entry. The only thing you have to ask is it giving me enough risk to reward to allow for me to trade it? And here, that's actually putting your stop here would be fair value gap. You have a small inverted fair value gap right here, which could be used as well. So your stop would be at this swing low. That's quite a wide stop. And to this low hanging fruit, it is 2.11 R. That is last second, but that is a beautiful trade. So this, or if you took the previous entry, which was on the inverted fair value gap right here, you had 3.73. Did I place the right stop loss? I always preach the 3PD array rule, which I repeat every single price action review. I'm realizing now. But you're entering off of this inverted fair value gap. You have this order block, and so your stop would be at the swing low actually. So it offered 2.91 RR, which is pretty great. And that is only targeting this with your higher time frame target to be even further, right? And if you had the perfect target today, your 1 hour inverted fair value gap, you had 4R, right? I prefer to keep things more realistic here. See, I didn't target this. I was fully out at this level. I had a great day yesterday. I was very happy with how the thread went. And usually on days like this, my emotions get to my head and I get cocky and I make dumb mistakes. So when I was catching this move, I actually got chopped up here. I had too tight of a stop loss trying to long. I believe I longed here, or well, possibly right after. I believe I had an entry on the mid-range of this candle, and I trailed my stop instantly to the low of this candle once I saw it expand higher. And as you can see, I got stopped out directly, took a breather, waited for 10 a.m. power of 3, managed to catch the first entry on this one. Well, more specifically, I win it before. So it's not the best idea for you guys, not the best example. We had divergence at these levels right here. You had SMT, so I was actually in on this candle, and then we had our manipulation lower and we went higher. So I guess I got lucky here that it didn't dig in deeper, but as you guys know, there's no luck in here, right? I knew that that was my invalidation level. My stop was right under that order block. So, after talking that much, let's look at ES a bit, just at the same specific setup really quickly. As you can see, I have 10 a.m. here. I'll mark it out. I'll mark out the open of the 10 a.m. candle just so you guys can have a level to refer to for where you guys are at. We retraced to a discount of a range, took out liquidity. Actually, it doesn't look like it fully reached a discount. Oh, yes, it did. Actually, that level was specifically at equilibrium. That was beautiful delivery. And you have your order block, your breaker block, sorry, right here. ES did not offer first entry right here. Well, yes, if you enter on order blocks, which I teach my students not to do. I do not think that entries based off of order blocks are high probability with my model specifically, right? They might be for someone else. But using this fair value gap, which is the same as this fair value gap on NASDAQ, you had a beautiful trade, just quite close to your objective. So right here you have order block, liquidity under the swing low, and the fair value gap. 8 handle stop on ES is massive. I would take in the trade still and put it under here just because of how NASDAQ is. But to be honest, at that point, you might as well trade NASDAQ. Almost 2R up to external range liquidity. If you round it up a little and say it's going to go 1 handle above, you had exactly 2R at that level. That's pretty awesome. But enough on that setup, because as we've spotted previously, here, let me just clean up my chart first. Let's clean up this. Perfect. There we go. As we've seen previously, we had SMT on our highs, right? Oh, nice to have you with us. Nice to have you with us. Finally caught us. That's awesome. But get back on track. We caught up to our highs. I'm also going to remove this. So, well, here, really quickly. Did you guys have any questions just on this first part of the analysis, right? Or is it pretty clear? Because I'm going to remove all my drawings, so might as well answer questions now, right? No questions? Awesome. I love it. I love it. Moving past that, after reaching this 1 hour order block, we have another opportunity. And as we've seen, as soon as ES took out that high, so as soon as NASDAQ took out these relative equal highs, we had SMT forming, right? And yes, NASDAQ could have invalidated that SMT. SMT doesn't work all the time, and especially when you have higher time frame SMT, as I said at the start, you got to give it time to settle, is the best way I can put it right now. So just to input its SMT and put up its high and consolidate, manipulate, and distribute lower before it can actually start dropping, right? So right here, that's what you could have been looking for. As I said, I did not trade this short. I did not get that. I wasn't in front of my charts anymore at that time, I believe. Honestly, I don't remember. I don't really look at the time on my computer or stuff like that. I really just look at, oh, what time of day is it, and then I disconnect completely when I'm done trading for the day. But enough about me. As we can see, manipulation straight into this hourly order block. You had to be watching your charts for sure. And then we had displacement lower. Awesome to hear, brother. I love seeing when people are taking the setups that I'm seeing live, and I just open the Discord and I see like an execution. Right now I see students sharing a lot of execution, and Zav, I've seen you as well, and also someone new. Sorry, I'm forgetting your name, but I love opening the Discord and just seeing, ah, he saw that too. That's amazing, amazing, amazing. But what do we have here? Change in the state of delivery at this specific point, right? Is it in line with power of 3? Well, 4-hour power of 3 expanded higher, but now my objective is met. So would it be true that there could be an expansion lower? Yes. And I already know that I'm trading the end. If you're trading at that time, right, you're trading the end of the morning session into lunch. So no, it's not going to be the lowest of liquidity runs, right? Took some time, but once time aligned, right, then we went to, right, on the, I'm specifically speaking on the 1250 to 1310 macro. So that's what gave us our low resistance liquidity run, but you had to be positioned first, right? So more specifically on that high, you also had lower time frame SMT. Let me just mark it out for you guys to see. I actually did think this was lower. It was not. So that's a misanalysis for me. Sorry about that, guys. So no, none at all. We only had it trading back into the resistance block as both were actually sweeping those highs. But enough of that. We have our change in the state of delivery right here. Displacement below that low. The only clear entry I'm saying right now, because as I'm telling you guys, I did not trade this, so I'm analyzing the setup real time with you guys. And yes, did not retrace back into it there. See, I'm big on breakers and high probability entry, and I don't see any high probability entries on this move. I see an entry, sure, right? You see it right in your face, fair value gap. See, I had my stop right, see, right here, you know, like right one tick over here, and I was targeting, yeah, low of day for 24 hour. No, the only person who I've seen done that successfully times and times over is ICT Concepts Kit. Love that man. But enough of that. To me, if there's no high probability trading setup, there's none. And again, for me, that constitutes a breaker block. For other people, it's a bunch of different ways, right? Everybody has their model, their way of seeing the markets, their way of trading. But I'm not going to change mine to adjust to theirs, right? As I would not expect someone else to do the same for me, right? It's all about respect in this game. And I don't take entries on low probability trade setups. There's no SMT, there's no clear power of 3 objective. And when I say power of 3, I'm not looking at anything below a 4-hour candle. There is possibility of scalping 15-minute open high low closes, you know, and power of 3. But that's just not for me. I prefer catching those large range moves and having multiple take profits, even if that gives me slightly larger stop than a typical scalper. But I feel like I'm rambling about myself right now. All that to say, no SMT, no clear power of 3, and no breaker block means no entry for me. And yes, you can learn to anticipate breaker block, so you could anticipate that this would become a bearish breaker and take the entry here. It is doable, but as I said, to me, that's not the best looking trade. But as you can see, right, the result was definitely there. The upside was there. That was if you took that specific entry. Let's look. You had a potential upside, let's just say up to 4 here. Let's just call it this low. I'm looking at this low right here of 200 handles. And honestly, seeing this maybe might piss off you guys. Well, oh, I could have shorted this. At the moment, I'm telling you, as a profitable trader that did not trade this move, I do not give a single fuck. Really, none at all. I see this, I'm not even slightly pissed. Why? Because I've caught plenty, right? I'll catch it on another day, another week, another month, right? It's about consistency here. It's not about getting all the moves. That was a big lesson for me in the beginnings. I wanted to be perfect. I wanted to get every single fucking move and catch the exact high to the exact low. And of course, right now I'm exaggerating a little bit, but that affected my trading big time because I could not get myself to be profitable because I was taking too many trades. So then I said, oh, I don't need to take more trades. That's not what will get me profitable. It's losing less. So yes, of course I take less trades and I miss out on this move, but I just got 3 to 5 R in the morning. Why would I need more, right? And I keep risk at 0.5%. Let's say we're talking a funded account here, and that's it, right? I don't need to go further into this. It's very simple. All you need is consistency. But again, I am rambling about psychology and trading. What can I do, right? On that note, do you guys have any questions at all? Right, I'm not going to go in depth and analyze what happened after, because if you didn't get in at this time, or if you didn't get in at this high, I don't feel like there is a high probability entry or anything. Same thing I just said, right? I'm concentrating on the real opportunities, not every single scalp I could have taken. I'm glad to see some new faces in here. I hope we're gonna get to see you guys very soon. Very soon on our next price action review and on our outlooks. It's great to have some new people in here. SMT liquidity grunts. No, actually, yeah, you know what? Why not? Let's get into it. So, if you're unfamiliar with the concept of SMT, I want to just start off by saying it's not one of my concepts at all. Everything I trade, well, everything I show publicly that I trade is purely purely ICT, meaning Michael J. Hullerson, the Inner Circle trader. All of this comes from him and him alone. And SMT is one of his concepts, smart money techniques. And it's about comparing correlated assets in markets. I have the best example here on a daily chart, so I'm just going to show you on a daily chart. I'm going to remove my drawings. It's about comparing correlated assets. So for example, Euro USD and GU USD are correlated. Why? Because they both have USD in their calculation. So if USD move, so the dollar index, their price gets affected. And more specifically, if the dollar drops, their price is pushed up. And if the dollar goes up, their price is pushed down or is stable, right? That is inverse correlation. So you could say that DXY, which is the American dollar index, and the Euro USD and the GU USD, which is British pound, right? Yeah, British pound USD, are inversely correlated to DXY. And when you compare correlated assets and uncorrelated assets, for DXY it's a little different, so I'll just use the most simple example I have, NASDAQ and ES, which some of the companies are similar. Well, you can look for one to take out a high when the other does not. So more specifically, I would be comparing swing points formed at the same times. For example, oh, well, that's not what I was trying to draw. I was trying to draw with a curve. Thank you very much. So for example, I'd be looking at this swing high on NASDAQ and comparing it to this swing high on ES right here. And then I need another pair. So what am I going to look at? I'm going to look at this swing high on ES right here. I went one too far here, and compare it to this swing high on NASDAQ. I'm not the quickest drawer, if I can say that, but here it is. So see how NASDAQ printed lower lows, lower highs, sorry, while ES took out that liquidity, right? As you stated, liquidity run. So it took out that liquidity with a stop run, liquidity sweep, liquidity run, however you want to say it, took out that high, while NASDAQ didn't. So that shows you, right? I'm not going to get in depth about the smart money concepts just like this and all the reasoning behind it, but it is good confluence that the high has been put up. And also, when you're going to be looking at strength, you're going to say, well, NASDAQ is weaker. It's stronger to the downside, while ES is stronger to the upside, right? So if I'm looking for a short, which one am I gonna prioritize? Well, NASDAQ, right? I actually placed my first trade on ES. I believe it was this Tuesday. I was testing out some stuff. My first trade for a while on ES, but I'm slowly getting back into trading both and using strength from SMT to tell me, well, if I'm looking for a short today, well, I'm gonna look for NASDAQ to short, right? And of course, now I'm looking at a daily chart, but as you saw from our previous examples, we were in a 1 hour chart, and that's what told you that, hey, well, if you were looking for the afternoon short, I would have shorted NASDAQ because it failed to break that high while ES broke that high. And of course, I'm always comparing swing points formed at the same time, right? If you look at my cursor, they align at the same times. Was that pretty straightforward? Or do you maybe have an additional question linked to that? Awesome. I love that. That little very clear. I love that. I'm seeing you typing, so I'm waiting to see if you have something else to add. Anybody else have any questions about that or anything, right? I see a lot of students in here, but to we had a little SMT class in the middle of our price action review, so that's pretty awesome. All right. Well, I don't see any new questions, so I'm gonna wish you guys a great night. We won't see each other tomorrow. It's not a trading day for me. I'm gonna take it easy. Oh, wait, you have another question. Why you feel less obliged to use this SMT using DXY and EU? Not less obliged. I just didn't want to show you the inverse correlation when you did not know. But here, I'll just make a small drawing. Let's just do that, and compare it to DXY, which would be, see how I said that DXY would move lower while would move higher while EU and GU would move lower because they are inversely correlated, meaning that if I'm looking at a high that was taken out, here I'll make a good example. If I'm looking at a high that was taken out on EU, GU, any of these currency pairs, right? I'm gonna look at SMT on the lows for DXY. That's what I meant. So because they are inversely correlated, I'm going to be well, I'm going to be looking at highs on this pair and lows on this one and vice versa, right? If I'm looking at the lows here, I'm going to be looking at the highs here. That's just how it is. It's not worse. It's just, that's it. No worries. Don't say sorry for the questions. I love this. I love talking about trading. I love sharing the trading knowledge that I acquired over time. That's why I do these calls. I wouldn't be here if I did not like it. So never apologize for asking a question. You're better off asking it and having someone not answer you or tell you, okay, well, that's enough questions for now, than regretting not having asked it. But on that note, it is that cue where no more questions now. I have to go. It was great having you guys, and we'll see each other on Sunday.